your perspective on the market today and generally what's happened throughout the week.
Hi, Lerato. It's a pleasure to be here. Now, to answer your question, the equities market rallied today, and this is after about almost a week of losses. I think the reason that rally was staged is because the value proposition on the table was too much for investors to resist. Now, back to why we've seen that slide over the last almost a week. I think it's the market responding to concerns that equities would decline significantly as the timeline for banks to draw down the exposure to margin loans to 10% approaches. More so, there's a cocktail of other concerns like political risk and also the delayed implementation of the AMCON also on the table.
All right, where do you see the market headed in the week ahead? Because we've seen a lot of sideways movements for the all-share index, really.
Well, I think for the week, we'll definitely continue to see value investors picking up some of the very cheap stocks. But if you're asking me how it will perform probably at the end of the year, I think that our outlook on that front is still very bullish. We think that there's still a lot of reasons for investors to be invested in this market. It's still one of the cheapest from a global perspective. That said, I think our outlook is really premised on the recapitalization of the banks on the back of the AMC being operational.
All right. Now, President Jonathan today unveiled his roadmap for the power sector. Has it had any significant impact, particularly on energy-related stocks?
Well, there very little. There's obviously no energy-related stock listed on the exchange. I think the way to approach it is to look at the companies that depend a lot on power. And here we're focusing on manufacturing companies. Now, on average, manufacturers' production costs will have about 6 to about 15% of energy within that company. About 15% of their total energy cost, also of their total manufacturing cost as energy cost. So it's very, very important for power companies, and we think that if the proposal from Jonathan just work out, it would obviously help improve their earnings significantly. But I think that it's too early to get excited by the president's plans. I think it's important we see some execution first before proceeding to to start buying manufacturing stocks on this account.
All right, Esili, just talk to us about the general environment in which manufacturers operate in Nigeria, because effectively, due to disrupted and what people call epileptic power supply, many are having to augment their energy with generators and UPS systems and the like, adding to the bottom line.
Well, that is true. The bulk of them run their power generators on diesel or gas. But I think largely the situation has also created an opportunity for some of the companies ahead of the game to be more competitive than their peers. So if you are a manufacturer using gas, for example, to power your power plants, you're obviously a lot more efficient than the manufacturer who's using diesel. But I think more broadly speaking, this whole push by Jonathan to improve power in Nigeria would obviously of tremendous benefit to the manufacturers generally. And on average, we're expecting about 15% improvement in their earnings on the back of a move towards 100% energy dependency on the power grid.
Now, I know that you follow cement stocks quite in detail. Using that example, how do they compare to the manufacturers in terms of their bottom line and how energy feeds into their earnings?
Well, they're also manufacturing companies, to be honest, but they're just more highly industrialized than the other manufacturers that produce most of commodities. They're more highly dependent on power. Power represents about 15% of their production cost. So it is a big issue. They largely depend on their own power plants, most of them, of course, powered by diesel. But we think that as we move towards more power coming from the power grid, it will obviously help improve their earnings as well. But just to speak generally, I think the cement companies are doing pretty well right now with margins in excess of about 27% on average. So any improvement on that front, power front, of course, would help just push those margins higher.